Thank you so much for having us. First and foremost, Jeanette, we've been looking forward to this presentation at TradeThirsty for some time now, as you said, and we're going to cover a lot of ground in a very short period of time about market profile and ultimately one of our most exciting tools that's come from our company, I would say since inception, John, quite frankly. So the title of our presentation is Hidden Secrets Exposed, Market Internals Breakthrough. I'm Steve Dahl, president of TAS Market Profile, and I head up our retail part of our business, dealing with individual and independent traders. And John, who's going to be doing probably the lion's share of talking here today, he's actually the creator of the Edge with countless, I won't even try to say how many man-hours in the development lab with our team, and he also works very closely on the institutional side of our business, our Bloomberg users, and so forth. So without further ado, we're going to put up on the screen for all the lawyers in attendance here the risk disclaimer, and we'll make some progress.
Thanks, Steve.
We're going to let people just view that for just a moment, and then here we go. John, I'll let you do what you do best, which is humbly tell us about your vast trading experience.
I didn't ask for these powers, Steve. Anyway, guys, thanks for joining us. And Mark, thanks. That was a great webinar. I watched the whole thing. It's very interesting, some of the information that he's putting out in those emails and how concise and powerful it seems to be. A little bit about my background, just a couple of bullet points. I've been involved with trading for a long time. I was in the board of trade for a while. Worked with Pete Stoudemire, who we're going to talk about that premise of market profile. Worked with him on floor number 36 for a couple of years, and did a lot of research with him. But one of the things that I always got frustrated about in working with him was, market profile is a pretty subjective way to look at things at times when you're looking at volume relative to price. And what I always wanted to do was distill it down into a more objective environment. And I think that's basically what we've done and what we're going to show you today. A lot of institutional type traders across the globe use this information. We've got a contract with Bloomberg, and we've been putting out information in Bloomberg briefs and actually have had Bloomberg Markets Magazine's articles written about us. So, Steve, if you want to keep flying through some of these slides here, we'll get past all the...
We are on to the next one. There we go.
Yeah, so today we're going to, again, like Steve said, briefly just literally fly through probably the shortest market profile dissertation you've ever had and really distill it down into our version of what's going on to actually create this product that we're going to show you today, which is extremely powerful. Where and when to take positions relative to that product, and talk a little bit about market timing relative to the product. We're going to get into simple steps to the trade, and then we're going to get into some questions and answers. So let's keep moving forward here. Again, talked about some of this already. I actually was also involved with a platform that was sold to Bank of America before some of these dates you see here, 2003 and previous to that. So got a software company that creates quite a few financial pieces of software. Again, we've got a contract with Bloomberg, but what we're going to show you today, literally, and if you want to keep moving through slides here, is something that was hidden in another piece of software that we had created, and we sped it up on a short-term time frame and really started noticing, some incredible opportunities based on the original premise that we're going to talk about today, put into one simple container that's going to provide you a way in a really easy manner to understand which way the tide of the marketplace is headed during the day-to-day operations of the broad market, the S&P in this case. So we're going to go over how do we measure and determine the degree of relative balance and imbalance. How do we know where a shift in control is occurring between market participants? How do we know when the best trading opportunities are happening and where these transitions are occurring? And what are the major inflection points to be aware of to pick our battles? So as we keep drilling down, we're going to go through, again, this is kind of a primer to get to where we ultimately where we want to be in the end of this presentation, which is to, if you guys trade stocks, we've got something for you on that too, because a lot of this information, because 90% of the stocks out there now trade with the market, and that statistic has never been higher in the history of keeping track of it. What we're going to show you today is extremely appropriate for trading stocks also. So we're going to get a broad market dissertation of how we want to try to understand where the markets are imbalanced on the upside, balanced or imbalanced on the downside. So what we just showed was a bell curve analysis, and that's going to be basically the premise of what we're going to talk about. So a lot of the data will lie within that meaty part of the bell curve when it comes to just statistics 101, basically. And what we're showing you right now is you normally look at volume relative to time. And if we go into the next slide, what we're going to show you is volume relative to price and our derivative of how that really works. So if we go to the next slide.
Yeah, John, I think it's important people understand this too, because as you know, I've literally worked with thousands of traders in the industry through my experience there, and one of the biggest leaps that people need to make from being just a volume follower, where again you got that vertical histogram, to the profound change in taking that volume and turning it sideways, flipping it on its side, and now you instantly have a price to go with your trading decision. That's that bridge that everyone in attendance here needs to kind of embrace, to then really appreciate what we put together in terms of a market profile tool to help make decisions. So that's what we're doing, folks. We're taking volume as you normally see it on your bottom pane, and we're flipping it sideways, so now we have a cross-reference point on your price scale, as you'll soon see, to make some decisions on where institutional volume is and is not, and then put together some very specific trading decisions. So that's what you're seeing here.
What we're showing you too is, just to give you a reference point of what Steve said earlier, where a lot of these institutions follow this particular mechanism. The Bloomberg world has about 350,000 terminals out there, and we have about a 1% penetration on any day of actual people who use the terminal, who are logging in and accessing this exact information that we're going to show you with this indicator in itself. So what Steve is showing you right now is we've distilled it down into taking and finding that meaty part of the bell curve where most of the data should lie to create our range, so to speak, with a blue line and a green line at the bottom. That's what we call our balanced area. So if Steve, we boiled it down to 3 simple lines. All right. Now, that being said, when we look at charting and volume relative to price, our algorithm outputs these particular profiles, as we like to call them, for you to view these so-called balanced areas. And there's some simple rules we need to go through to get to the next level to talk about how to use the edge. So generally speaking, when prices are above profiles, it's okay to be long and not okay to be short. And vice versa. When we're trading below profiles, we've gotten out of a balanced area. Prices usually will move quickly, so it's okay to be short and not okay to be long in these cases. When profiles are relatively wide, we've got relatively high volatility. This is all going to come into play in the software we're going to show you, and how we've tried to, again, make this as simple as humanly possible for you to gain an edge. And low relative volatility obviously will be smaller balanced areas, and these are all output by an algorithm that we have. You can orient stops, play defense against these profiles. Some of the things Mark was talking about before on the last webinar, I saw him talking about stops and playing defense, and you're not always going to be right. That's the case in trading, period. So when we use these profiles, we're able to, again, orient stops, find targets, and initiate the trade. So these are basically the profiles that work that we had a primer on the past couple of slides. And I think Jeanette's going to record this so you can possibly view it later. So the big question is, what if we could find out where the institutional footprints are and trade with them? How could we determine how to time the market and where to enter and exit trades based on the tide of the marketplace changing?
This is where I give you a drum roll, okay?
Got it.
Introducing the edge.
Yeah, so this is a standalone piece of software, and you're going to look at it and say, well, wow, where's all the buttons and where's all the menus and that type of thing. And Steve's going to talk about some of the user response and some of the broker response to this particular product. Again, we've created a lot of pieces of software, but Steve, go ahead.
I was just going to say, John, given obviously we've been working together over a decade, and we've created a lot of really neat products in that time and rolled them out to the active trading community. And I got to tell you, in reality, I've never seen such an enthusiastic response from professional users. These are commodity brokers, these are hedge fund traders, these are people that again put hundreds of millions of dollars at risk, and they're looking at the simplicity of the tool that we're going to show you here. And I told you, John, I was in Chicago meeting with a very prominent trading firm and an industry veteran of over 30 years. And I sat down with my laptop in their conference center with him, and I showed him the Edge for the first time. And if you can, Jeanette, put the big expletive here, as I'm about to say, he said, "Holy boop." That was his response. This is a guy who's been in the business over 30 years, and he's, he's seen it all. And as I was telling John, I think things have kind of come full circle in the trading industry for traders, brokers, decision makers, wealth managers, where for a while things got really complicated, where the more tools you had, the more indicators and analytics that you looked at, you kind of felt you were empowered to make a better decision. But I'm telling you, and I've been in the business nearly 2 decades myself, that I believe the tides have turned to simplicity. Ease of decision making, and again, just targeted clarity, which you're going to see here. So we'll move along.
You know what, Steve, that's interesting. I want to make a footnote to what you just said. One of the guys that I deal with and consult with in the institutional world through Bloomberg, he's a guy at BNP Paribas. We showed him this product. He started using it, and his exact words were, "I know exactly what to focus on now and what I need to let go of." And again, you don't see any charts on this Edge product, and that's actually by design. For one reason, we're not going to disseminate prices to you and have you have to incur exchange fees and all kinds of other things. We're giving you the level of the market and giving you indications of whether it's okay to be long, not okay to be short, or okay to be short and not okay to be long. We've also put some other things in here that we're going to go through a couple of definitions really quick. First, but just having people have that aha moment and taking a deep breath and saying, "Wow, was I trying to make it more difficult than it needed to be?" If I know which way the tide of the marketplace is headed based on the internals. And what this product has done is it's taken all that information that we went over at the very beginning of this webinar, and we've aggregated every single stock in the S&P 500, got that aggregate information, and created metrics based on market capitalization weightings of looking at those profiles off each individual instrument to create a situation where you understand where the heavy balance of the market is and when it's out of balance. And when it's out of balance, there's some interesting things that you can do. You can block out all longs or you can block out all shorts, and that's a very comforting black and white situation to have under control. So what Steve is pointing out here now is we want to actually have 5 key considerations when using this product. And we're going to go through examples and steps, simple steps actually, on how to use this product to ring the register. First, Steve, opportunity. Is there an opportunity? Is there a classical setup that we can take advantage of? And we're going to go through those couple of those classical setups. And we've got TradeThirsty has just been incredible to work with. They've posted all, any basic training tutorials that you'll need to use this product on this as you purchase it. And again, we've tried to keep it as simple as humanly possible to use it. Time. Is it the right time of day to actually take advantage of some of the things going on the screen that you'll see? Can we play defense? Again, going back to what I viewed Mark was talking about earlier, playing defense and being able to put stops in and knowing where you're wrong is a huge, massive part of the game. That's actually the same case with this particular product, and I think we've made it super apparent that we'll talk about some of those things where hey, the tide of the marketplace has shifted. It is ridiculous at that point to try to double down in the wrong direction, et cetera, et cetera. So it's very, very black and white.
John, I think it's worth a footnote because I spent, as you know, 16 years in the commodity brokerage business myself, so I know some of the pain that traders go through. And it's not exciting to talk about defense, and that's why you don't see this as a bullet point on a lot of people's presentation. People want to talk only about the profitability side.
Yeah.
You know, you and I, having kind of being old dogs in the industry, like to talk about defense actually first, even before we talk about profitability, because, you know, look, if this product helps you to know that you're better off going and playing golf versus trading, and it saves you $1,000 on a day or more, depending on the size you trade, remember, that's real money. A penny saved is a penny earned, pardon the cliche, but in trading, it affects the bottom line the same way. So you'll see some examples of that as we move along here.
Yeah. Where are our potential targets, and what are we trying to use to regulate the trade once it goes in our favor? And number 5 is volatility. So that's a huge part of the game in my mind, because, you know, when the markets get volatile, we want to be able to show you, you know, you're going to have some noise, so to speak, and some, you know, bigger gyrations that you're going to have to deal with. So we've got a little volatility index on the product, and I'll tell you how that works. So here's 5 simple steps to the trade. These are just, again, in the tutorials we go through this, and I think you'll really, really get it. You know, if we had a lot of time today, we could just kind of plow through all these in a deeper sense, but we can't do that today. So step 1, be aware of all major profiles and inflection points. Rank them from longer time frames to shorter term time frames. The purists will ignore these, but in our studies they must be adhered to. So what we're going to show you is a red light, green light way to trade the markets, and therefore trade your individual stock instruments based on this information. But we also want you to understand that some of the major inflection points in our landscape view within the edge, you need to be aware of these things, because they can be looked at as targets, and more importantly, like Steve said earlier, how to play defense efficiently while, you know, increasing the risk-reward scenarios. So,
John, I think it's worthy of note here, because this is so important to the rest of the discussion, that when people are looking at these 3 lines, if you missed it earlier in the presentation, essentially what you need to take away from this slide is that this is these are value areas. The top red line is an unfair high. The bottom is the green line is unfair low, and that middle blue line is what's called a point of control, or the mode. And the simplicity of what you need to know what you're seeing here is the yellow line is where the market is, and that of course will move within the product. If you're above the red line, above that, we call it a balance point, you should be in bullish situations. When you're below the bottom green line, you're typically in a bearish scenario, and then when you see the market is within, but below the red, above the green, you're in that value area. So this product makes it super quick and easy for you to look at the weekly, daily, 4-hour, and an hourly chart all in one place, which I can't impress upon you enough. That would require you to have to go look at 4 separate charts in order to get that same information, and you still have to use our product. So this is all in one place. It's a beautiful thing.
And the indicator that we're actually putting into the mix today, if you buy the edge, this is the indicator that you will get on 2 different charting packages that we're going to go over later. But, you know, these inflection points that I've got circled, a confluence of inflection points, 2 different profiles lining up at the same point. And as you can see, when price action moves below these inflection points, it moves relatively quick. And that's what we're counting on to gain an edge in determining where the tide of the marketplace is changing. And that's a function of looking aggregate-wise, all the internals summed up in that fashion to make that analysis. So, you know, these are all being crunched on our servers. This is our algorithm. This is another example of a different time frame and looking at the individual profile on that time frame. So when you're looking at the S&Ps or looking at Amazon or looking at Apple, if you've got this indicator, you can also look at, you know, what's the balanced areas, the profiles relative to the underlying instrument, and also use the edge, which we'll show you in a second how this all works together, to try to determine how to, you know, either step on the gas pedal on the long side or the short side.
Exactly. So, folks, as you're looking at this, you notice the distance between the top red line and the bottom green. It varies. Sometimes it's a more vertical and greater distance. That would be a more volatile trading period. But as you see right here, this example shows thin profiles. There, it's kind of scrunched down. That means you're in a lower state of volatility, and you actually could have some lower risk entries into the trade when you see that scenario. Okay. So you get a volatility gauge built within this.
Right. Okay. So, major inflection points, I've got one circled there, and this is a real-time situation that we were looking at the other day. And that's where the level of the market is, that yellow line, and that's a major inflection point. 2421 was a big number on the S&Ps, and even lower, 2403, 2406, we had some inflection points lining up down there. But what we're going to get into next is we're going to show you, the next slide I think is going to be something that people start getting this here. When we look at the edge and we have a crossover happening, crossing over means the red line going above the green line, or the green line going vice versa. When all that happens above the blue line, that is a significant something to be aware of. All right? Now, what does this all mean? Now, when we look at this picture, we've got something circled on the left, and we've got an inflection point in our landscape view circled on the right. Now, when this particular, okay, it's like a tug of war. You've got 500 stocks in the S&P. We're aggregating all that information. When that red line pierces above the green line, especially above that blue line, what does that all mean? That means that the amount of stocks trading below profiles is exceeding the amount of stocks trading above profiles. And all of that is a tug of war because the amount of stocks trading within profiles is very, very low. So simply put, and this is for the purist, when that red line is going up and the green line is going down, you should be looking at short opportunities only, and vice versa. All right. Another thing that we talked about earlier just briefly was how this product allows you to block out one side of the marketplace. So what I wanted to do was focus on this particular day, and this I've got some examples from Thursday we're going to show you, actually, because we did the slides Thursday and I wanted to capture the latest day. But if this green line is above the red line, and it was all afternoon, if you go over to your kind of start of the afternoon where the S&P start going up there, Steve, on the, maybe you could circle that. I forgot to circle that. But on the landscape view, oh, excuse me, on the chart itself, a little farther to the right. Yeah, well, anyway, towards the afternoon, that green line stayed above the red line the whole afternoon. And therefore, it was okay to take long opportunities or just stay long the S&Ps or your high beta stock that you might be trading. All of that, again, is telling you I do not need to try to pick the high print to go short. I don't need to look at shorts. I'm only looking at long opportunities. And for most of the guys out there, again, going back to the simplicity that Steve said, some aha moments were going on with brokers, institutional guys, retail traders. It makes it very, very black and white to try to block out one side of the market and to know that I'm trading with the tide of the marketplace. When that green line's above that red line, I'm only supposed to go long. And those inflection points that we talked about earlier in the landscape view are those areas to pick the battles and play defense against. Now, you can drill down into shorter term time frames, and we're going to show you a little bit of that in a second. But again, it's the premise is when the tide of the marketplace is imbalanced on the upside, you are only taking longs, and vice versa. So there's a couple of ways to use this in different manners that are somewhat anomalies to those rules I just mentioned. Those are general rules we talked about. So this is a favorite trade of mine, and I think it's probably a favorite trade of Steve's, is when we get into extremes. All right, so there's a line on the edge that's what we call our 66% line. All right, when that is pierced and it starts heading back down below, you've got a possible reversal at hand. All right, now this happened twice in this picture. And we go through this in our tutorials very, very detailed. the odds are when that pierces the 66% line, and that's, again, saying the tide of the marketplace is long and starting to turn around, if you get down below, the amount of people reaching for shorts starting to outpace the middle line, the blue line, then you've got something you can act on pretty seriously. This is a reversal situation. It's saying the tide of the marketplace is about to change. I need to be ready for it, and therefore I need to find a way to enact some shorts in that case. In this case, we've also got a short situation. We breach our 66% line up top. Again, this is trading extremes. You've got our red line crossing our blue line from down below at the same time. And as you can see on the chart, what we did over here, I forgot what day this was, last week or the week before, but we've got a 5-minute chart on the right, and you're seeing exact the time opportunity that happened and how the market fell apart. Now you're also seeing in that particular chart on the right a profile sitting down there, and you're seeing it travel the entire fair auction or the entire balanced area as it settled out in a pretty volatile environment. So the initial trade was kept on the entire time until that green line crossed back above the blue line. That is basically your target along with your stop situation to reverse that particular trade. And again, you know, this is something that's giving you shifts in the internals of the marketplace relative to market profile. So Steve, I know this is something, this is not a product that's going to allow you to trade every 5 minutes long and short. It's going to define super high opportunities that you can act on, and they're not going to be there sometimes every single day, but when you're in the market, you know that you've got huge odds in your favor based on understanding which way that shift in tide of the marketplace is changing. Steve, didn't you have somebody the other day talk about what it had done for them, and I don't want to talk about their winning percentage per se, but
well, he said he had 20 in a row, John. I'm not afraid. I don't want to set unrealistic expectations, but yes, with an email to prove it. An early user in his first 2 weeks of the product was tickled pink. He had actually found himself 20 trading opportunities. Again, without him being able to kind of vet through exactly how he used the product. I don't care. That's you flip a coin 20 times and you're not going to get remotely close to that. So I don't want anyone to expect 20 winning trades in a row when you get this product. In fact, I want you to think a lot smaller win percentage, but how this product can keep you in bigger tide moves in the market, be in those winners longer, and then of course telling you when it's time to get out of these trades when you can cut your losers short. This is a good example, John, I think, for people to digest as they're kind of starting to think about how this can fit into their trading. And the edge, as you look at this, because people are, because these are screenshots, they're still kind of trying to be like, well, what part is the edge? The edge is what you see kind of the left side of the screen right here, and it doesn't require a piece of data. That's a common misconception is people use this product. They're saying, well, where do I get, do I got to get exchange fees? Do I need another, piece of software I got to buy to use it? The beautiful thing about the edge, it's all bundled up in one package. And so you get, as John said, these 3 simple lines on the left that look like kind of an EKG output. This is actually telling you kind of who's winning the chip count in the poker game between the bulls and the bears in the market.
Exactly.
And it really is. That landscape chart, again, giving you that perpetual awareness of where the value areas are. I like to refer to them as balance zones on those 4 critical time frames are, so you just always know where you are in that landscape, and thus we call it the landscape view. And then on the right, John, I think we need to get both of our heads checked because, putting in that profile indicator into the package we'll be talking about shortly, that, folks, I'm not kidding you, we have people that have used this product for over 10 years for these levels alone at a very high level, managing just countless bundles of money, and you're going to have that. And you can use it. This is the beautiful thing. If you don't trade the E-mini S&P, don't tune out of this webinar because those levels, you can use those on any market, any time frame, as you'll soon appreciate. Stocks, ETFs, commodity futures, forex, any time frame too. So long-term trend following, active day trading, it does not matter. So, sorry, I'm a little excited here on Saturday morning, and I got an extra cup of coffee in me.
I'm excited too, because the simplicity of the edge, I know again, trying to cram everything into 45 minutes is impossible for a lot of things, but the simplicity of when the red line's above the green line, except certain instances that we go through in the tutorials, it's real, easy, and I think easy to understand that I'm only supposed to be long or short. And one of the things I wanted to go back to when I was trying to reference that particular user who had emailed something in the other day that I was shocked in his winning percentage. One of the most important things that he said was, you know what, it kept me from doing stupid things that I seem to always get myself into. So the value of this, if nothing else, is keeping you out of bad trade situations that are not where the probabilities are in your favor, and especially not where the broad market is in your favor. So this tie to the marketplace product, simply put, when that red line's below that green line or the green line's above the red line, you know exactly what to do. Now, for guys who are out there trading stocks, and trust me, 99% of the globe trade stocks relative to currencies or futures, and I get that. But I wanted to show you, this is literally Thursday. Okay, we had an extreme happen. We had a stake in the ground on the edge by getting above that 66 line on the left, that circle down below. All right, we had the red outpace the blue. That's an extra signal saying, hey, even though the red line's above the green line's above the red line, there's an anomaly opportunity that we go through in the tutorials that this is something that has some extreme value when this is happening. IBM intraday, the chart is tick for tick matched on the time frame upstairs, starts selling off. All right, we actually go back to IBM for a second. I want to walk through this one particular stock. Okay, as IBM starts selling off and reaches the bottom of its profile indicator that you have access to with this package we're going to talk about today, the red line crosses the green line and is above. IBM henceforth sells off even more. But what I wanted to point out in what we've just talked about is in no capacity or in any way with this particular setup were you shown that there was any type of mechanism to start going long IBM. All right, this was a classical anomaly setup that we pinpoint in the tutorials. We had our particular profiles measuring this on the way down on the individual instrument, and we had the tie to the marketplace even become more in our favor, and that's why IBM showing itself early as something cooperating with this was going to sell off even more so. As we got, go ahead.
Just another example here, John, and I think just a little footnote. I think a nice analogy to relate those that are individual stock traders in attendance, which I'm sure is the majority of folks here. It's kind of like, is it useful to go fishing only seeing surface level of the water, or do you use a depth finder so you can see what's going on underneath the surface? Well, if you're like me, I don't call that cheating. I use a depth finder because I want to see where the fish are, where the bulls and the bears are, and how many fish are under the surface level. So this is kind of like what you get with the edge. The edge is, again, categorizing every single stock in the S&P 500 and putting it in one camp or the other, or that middle camp as well, and you can side with the current instead of trying to fight it. Finally,
Steve, I don't feel guilty about using this if that's where you're headed with it.
Well, I'm still working through that. I do.
Like Steve said, nobody's giving this information out at all except us. We're doing it on our own servers. We're giving you a chance to take a slice of the market out and look at it based on trying to trade either futures or high beta stocks. And when you get this type of information, and understand, a lot of people look at one chart. They're looking. This really now kills me to think about this. Is that you're looking at an S&P chart, or you're looking at an IBM chart or a Microsoft chart. You might look at the tick or trend or something like that, but this is actually giving you so much more information to try to make a decision And it's actually a lot easier to make that decision with this information because, you know, all the studies that we've done, and we've gotten a ton of user feedback on this. And again, this is an amazing kind of distilled down into one simple process product. We don't have charts on here for a couple of reasons, but one of them is, and Steve's showing the product right now, one of them is, I don't want any charts to cloud my judgment when I have this type of information in front of me. So I don't want to artistically kind of, okay, head and shoulders, all these types of things going on. I know for a fact that I'm either supposed to be going long or supposed to be going short. And this thing puts that type of information first and foremost, along with the profiles of the broad index itself. So, Steve,
John, based on the chat that I'm watching here, as you're doing some great commentary, I just kind of felt the need that to show the product. So I pulled this up here, and I'm just going to kind of reiterate what you get with all in this package. Again, you don't need another data feed. It's all inclusive in what you see on the screen here right now. Of course, you get the head count of, again, right here. One of the questions coming in is talking about, like, you know, do you see how
market cap weighted?
Exactly. You see how many bulls there are. Look at here. It's Saturday, so this ain't moving, but during the heat of battle, these numbers will be moving. 237 of the S&P 500 stocks are bullish. You see that it's up there where it says above, and this 43.29%, that's a market cap weighted number. So your big boys like Apple and Google, if those are a part of the bullish camp, you could see that's going to drive that number up higher. And look down below where it says below in red text, just 86 stocks in the S&P 500 are in the bear camp. What does that tell you? Well, it tells you that if essentially you're going to look for a trading opportunity on the short side, now you got a smaller suite of markets you're going to be looking for to find one of those 86. The volatility gauge is awesome. This is essentially, remember we talked about when those levels expand. Remember that red and green line when they stretch out? This volatility gauge, literally, what one of the users also, John, I didn't share this with you.
This is your noise factor.
This is your noise factor. When that number goes up the Richter scale, and again, being Saturday, it's static, when that starts to creep up, you are in a more volatile market. So me, as an active, even the S&P trader, when that starts kind of, that odometer and starts moving to the right, I know that two things. Either maybe this is too volatile for me to be, risking my hard-earned money in, or I'm going to have to probably work some wider stops if I am going to continue to trade in a super volatile market. So I want to make sure, coming back to your landscape view over here, you want to make sure that you have good inflection points based upon those longer-term levels, and that's, what it comes down to. But again, I just wanted to show this very quickly here because we're nearing the end of the presentation part. As you put your cursor here, again, you can see when these spikes, the rubber band gets stretched way out of line, and then you're looking for opportunities to pursue a correction in the market. Okay.
Right.
So let me pull this off here, and I know Jeanette's probably going to keep nudging us along. All right.
We can answer some questions. Let's just get to some summary statements here. Making money in the markets can be one of the toughest jobs you'll ever encounter. The edge will help you increase that profit potential. There's no question in my mind that that's the case. You base software that you created on user feedback. You get feedback, then you tweak it. You get more feedback, you tweak the software, you change the mechanism, and you try to, that's just the way software is built, and that's the way profitable systems are built, to be honest with you. This is a product that literally is using some of the best things that we've created over the last 15 years and drilling it right down into the heart of the matter to make it as simple as possible for you to take advantage of that.
This is important, this slide here, John. It says, who's the edge good for? It literally is good for any trader, whether you're brand new and you're just in this webinar digesting markets for the first time. If you're in that middle of the road intermediate where you're looking to kind of take it to the next level, this is a great product to help you get there. And then the expert trader, it's already, again, proof positive by the institutional embrace of this product and our analytics at that Bloomberg level. It's the best vetting and credibility voucher I can give you. We love doing webinars as much as the next person, but again, us being able to say since 2011, Bloomberg embraces our product, that's all you need to know. The second trader it's for is anyone who wants to have an accurate tool to time their trades. and it's also good for the trader who wants to actually learn and stop guessing about trades and whether you want to go with one market that literally defines the rest, the S&P 500 futures market, okay? And we showed examples. You still can trade individual stocks with the benefit of the edge, giving you, again, that tide shifting knowledge, as well as when probabilities are going to favor a time to enter. And then the fourth, anyone who wants to master good risk management on all trades on any time frame. It's very powerful information. So
recap, and we'll get to the slide that is the most important here. Precision trade entries, it gives you profit-rich opportunities, determines the degree of relative balance and imbalance, finds a starting point between where a shift in control is occurring between market participants. That is huge. That is key, and that
huge.
That is what any institution is using that you haven't had the ability to use until now. Trust me, these guys are not watching one thing on a chart, on a bar chart from eSignal or Ninja. They are diving much deeper and using this type of information to make their decisions. Confronts the biggest challenges that almost every retail trader makes, limiting losses and being ready when the tide of the market shifts. So, Steve, let's get into something.
It's coming.
All right, so today, Steve, why don't you explain what everybody's going to get and what the deal is?
Yeah, this is I'm so excited, and again, this wouldn't be possible without the fine folks like Jeanette and everybody over on the TradeThirsty team for putting this together. So the Edge, again, to recap what you get, and I've been doing my best to give you a little Saturday preview here. Probably maybe we can also get together with TradeThirsty for a live markets one. I know that's a lot of fun. I just wanted to flash the product. You get the standalone indicator right here, not platform specific. It's a simple installation. I think it takes all of about 30 seconds to install the software. John and I have put together a bunch of videos, and here's what's really great about it. These video tutorials are available to you through the TradeThirsty members area that you'll have access to. You can watch them at any time, and it gets even better. John and I are going to keep making videos when we find good examples in live markets. We turn on the recording, we start talking you through high probability chart patterns, so those video on-demand tutorials will grow. It's easy to access in real time. As I showed you, again, it's just a little light piece of software. You see I'm just kind of floating it on the screen here. You just move it on your trading real estate, and it gives clear trend signals via the Edge dashboard. So there's for those of you watching this on a recording, of course, that's the website down below that you'll go to make the purchase. And it gets better because TradeThirsty is they're fantastic at what they do in bundling up value for you as traders. So
they're good at getting people drunk and having them agree to lower pricing too. So
yes. I wasn't on that meeting, but I said, John, I think they twisted your arm maybe off, not even twisted it. They may have twisted off on this deal. Here's the big one. This is one of our most popular indicators, folks. It's called.
And we're including this.
We're including this, okay? Normally, again, the Edge all by itself is worth its weight in gold, but the task profile indicator, also known as the boxes, this is that indicator that we've showed you that you can apply to your chart, giving you essentially maximum flexibility. You can trade in your other commodity markets. You can trade individual stocks, ETFs, forex. It does not matter. You can apply that thing. We're going to feature TradeStation and NinjaTrader. Of course, those are fantastic platforms, and the free version of NT7 makes it very low barrier to entry into that. So the boxes helps you alleviate the ambiguity of market profile. You'll always have awareness of those value areas. It'll help you pinpoint those high value areas, the low value area, and point of control. Remember those three lines, just like in the screenshot you see. And then it actually levels. It reveals some specific entries, stop losses, and targets. Those three simple lines give you all of that: entry, initial stop, and when it's time to trail the stop when new levels have formed.
So let's get to the meat of it, Steve, now, because we're throwing that indicator in with this particular package. And again, Jeanette,
This is. I don't know. Again, I'm going to have to make sure I fly with you every time you step outside of the East Coast office, and because when you came back and said, "This is what we're doing,"
Just tell people what they can get and take their questions. Y'all are upsetting me. I'm having a cocktail. It's too early.
Here it is, folks. Again, this thing, you'll have days that this thing will either save you thousands or make you thousands. That I guarantee you. Somehow, some way, you're going to get this package of the Edge, including the boxes indicator, the task profile indicator, for $4.97 for a quarter. To appreciate that, you go to our site right now. Just for the Edge itself, $11.97, and that doesn't include the profile indicator, and that runs another $300. So again, this expires. It looks like this is tomorrow at noon. So no better time than today to just take care of it and lock it in. Please, we don't want to hear on Monday or Tuesday or after the fact people saying, "Hey, I didn't know" or whatever. But we look forward to empowering you with the Edge. Open Q&A at this point.
Yeah, we've tried to cover quite a bit here quickly, and it deserves a little more attention than this, but I think the highlights have been made, and how to use it to its fullest advantage. We've got a nice little video series on it, and again, it's a simple product. There's not a lot of moving parts on it, obviously, and learning how to use it will allow you to ring the register pretty regularly, I hope. So
I'm going to grab some of these questions, John, so we can get through as many of them as we can. Questions about the recording. Jeanette's your go-to on that. Yes, she'll be getting that out to you as quick as she's able. How do you know, where we go here? Pardon me, hold on a second. There you go.
Yeah, we provide full support for this.
What markets does the Edge do? It's the E-mini S&P. It does its analysis on 5-minute time frames, folks. But again, you also get that insight into weekly, daily, 4-hour, and hourly as well. But the Edge part of the analysis, the market internals, is on 5-minute E-mini S&P. Other questions coming in are you planning to release in Thinkorswim? We are in some discussions with Thinkorswim that we're not at liberty to say at this point. Stay tuned. Can you change the colors on it? Nope, not at this time. But
right now we can. This is what we've got a great proof of concept here, and people make money with it. We make money with it. We're putting into our algorithmic trading. In fact. But right now we're doing it only on the S&Ps. The indicator that Steve showed you on the previous slide can be used to look at crude, gold, IBM, whatever. But the Edge product we're going to be doing, and if you get it now, today, we're actually going to be doing this on the Nikkei, the Singapore 100, the Thai Set 200, the FTSE 100, and we'll just include you in those particular markets. If you're overseas and you like this concept and it's going to make things black and white for you, we're going to be coming out with those. But we wanted to make sure we tightened down the screws on the S&P market first and make sure we had something special. And I know we've got something special, and we're going to be on the new indices soon enough. So
next question coming in is. How does the indicator work on forex if no volume? It analyzes time at price for forex. Again, when you're using the profile indicator, it's adapted to analyzing time at price, and you get those same very reliable outputs. Alerts. The question from VK is, how about an alert mechanism? Actually, that's something that we're actually talking already about rolling out in an update where not an alert to buy or sell, but certainly an alert when we are breaching and putting a stake in the ground above that 66% level. We're working on that, and already that's part of our feedback group, which you could still be a part of, by the way. If you purchase the product, we are putting together a feedback group where we will reach out to you and say, hey, help us make this good product a great product and benefits you and us in that process. Question is, do you lock in at that price? You bet. You lock in at that price, automatic renewal on a quarterly basis, and it kind of insulates you from our future price increases. Supply and demand will rule prices in the future as well. This is market profile analysis, absolutely, Aiden. This is kind of taking a different approach to it and just making it easier, more black and white, or in our case, green and red.
If you've used market profile before, and I think a lot of people respect that. When I was in the board of trade, it was literally the only thing I could rely on. That's why I said, you know what, I know what to do now. I know what to focus on. So all the slants towards any type of trading edges that I've tried to develop over the years have been centered around my derivative of market profile. And that's, not having to put the profiles manually on each instrument, each time frame. And this is an automated algorithm that outputs balanced areas, either wide or thin, or how long they should be enforced based on that algorithm, and turns it into a very, very objective rules-based environment for you to use. And that's what the Edge is built on. It's built on this indicator and the power of this indicator looking at an aggregate view of all the internals of the S&P 500. I will tell you, when I came up with the aggregate idea within the Edge, I didn't know if it was going to work or not. I was like, you know what? Let's look at RSI, let's look at this, let's look at everything else aggregated. Market profile aggregated in this manner works, all right? This is how we block out one side of the marketplace in automation. We've done longer-term studies, weeklies, dailies, all kinds of different time frames. This allows you to only take longs, only take shorts, and literally stay out of trouble, period.
I'm just giving a live look at the market. Again, it's Saturday, folks, so, the odometers are not spinning and ticking in front of you, but again, this thing refreshes perpetually so that you'll see, again, during live markets when you get started and you start looking at it on Sunday night or certainly Monday, as the market goes into prime time to kick off the week, you'll see this product kind of come to life, and that's what's great. You get everything all bundled up in this package. Again, to reiterate, no extra data feed required, no host platform is required, and away you go.
I've got to tell you this too. We're probably going to limit the amount of users on this thing at some point because we're getting so much positive response to it. We want to make sure this thing's reserved for. And again, we did an initial, introductory type of rollout for this thing, but we want to cap this at a certain amount of users because it is that type of powerful information, and we want it to always be successful for anybody who's using it. So somebody's asking, somebody asked a question about that.
Quite a few people are asking about where they get the videos. Again, after your purchase, you'll be directed to the TradeThirsty members area, and they'll be tucked in there. I think there's 9 or 10 videos already waiting there for you the moment you make your purchase. And again, what's cool about that and the way we've got it set up with TradeThirsty is the fact that when John and I create a new video and we see a nice example of a high probability chart setup with the Edge, we're going to create another one, and it'll instantly be available for you to right there.
One of the things I think Jeanette has done here is she's created like a business in a box for you at a very low barrier of entry. Like Steve said, you're going to get access to those videos. Those videos are a template to make money with this particular product. So what she's done, again, this is extremely discounted right now, is provide a quarterly price where you get that business in a box where all you've got to do is get this product, watch those videos, and show up to the market. That's all you got to do.
Another question. I like that, though. It's true. Another question, it looks like spaghetti. Well, it certainly does. And then as you get educated about the Edge, you'll realize that what these lines are, this is a scale of 100% all the way down to 0. So as these lines get up higher, the red line represents how many stocks, what percentage of stocks in the S&P 500 are bearish below our proprietary value areas. So when that's way down here, it corresponds with the fact that we said just again 16% of the market is below profiles. This blue line in the question is those stocks, 177 of the S&P 500 stocks, as you can see up at the top there, are within profiles, kind of in that balance zone, yet to be won over by the bulls or bears. And
one of the things, again, the blue line, let's just stick on that for a second because I saw a question about that. if the blue line is very high, guess what? There's a lot of stocks in their own balanced area. Therefore, there's a lot of stocks bouncing back and forth. Therefore, there's no way, in this particular example, there's no way that the index or a lot of stocks themselves could start breaking out, because either the futures are the futures, it's a fact, the futures are indexed to the stocks trading. And also those high beta stocks, which are, lately mapped exclusively almost to what the index is doing. So you've got a chance to range trade if you'd like. I personally think that's a little more riskier trade, not really kind of going into the classical high probability setups, but you're aware that that's what the broad marketplace mode is really in right now. All right. Another question that I really want to address, Steve, is does this work only on normal market hours? Well, think about it. You do have some opportunities pre-market and post-market, but this relies exclusively off the amount of stocks in their trading hours to give you what's going on inside the marketplace from the internals. So, as the market opens, there's, market makers are trying to figure out where to price stocks. And a lot of people say, hey, the futures always lead the stock market. Well, there's an arbitrage opportunity there. The futures are mapped to what's going on with the individual stocks. So in the morning especially, there's a tug of war where these market makers are trying to figure out where the balanced areas are, because their main goal is to get filled. Their main goal is to get hit on the bid and hit on the offer. So when they start having this tug of war, the edge reflects that within the underlying instruments, and when whoever wins that tug of war on the opening, you've got basically a free trade on your hands, because guess what? The people who are wrong, the market makers and market participants, have to start covering, and you basically get a free move. So when you're trading futures exclusively looking at a futures chart, you do not get that information, and you are at a disadvantage. This is an information advantage, and you have to look at it that way.
One of my favorite things to do at this point of a presentation is talk to the traders and just have you think a little bit about kind of your trading as a business in reality, because this breaks down to the $497 for 3 months. It works out to about $165 a month, and you divide that by typically just 22 trading days in most months. This is about a $7 cost to you, right? A $7 cost to you, less than one tick in the E-mini S&P. Literally less than the one tick in that E-mini S&P, and that's the cost to you. And it's one of these things where, like, I have to do this with traders, and I say every time you trade, remember, and you make a decision to put on a trade in any stock or what have you, you are putting money at risk, whether it's a few $100s, a few $1,000s, or what have you. And this is the thing that still to this day perplexes me, is that the same person that says, hey, I'm not, today I'm going to pass up on paying $497 to get this great tool because, well, I got other things I could do with my $500 on a Saturday night. So they pass on it, but then on Monday they're going to go and they're going to risk $300, $3,000, $30,000 on a random, gut instinct pick in the market. And to me, that's just absolute lunacy to trade like that. It's haphazard, and bad things happen when you leave a lot to chance like that. So I just want you to think about that. $7 a day for you to be able to make some better decisions, keep you out of days that are going to be days you're going to be glad you don't trade, and again, being a part of some days where in advance of the moves, the edge can foreshadow some opportunities going both the long and the short side.
Yeah, the TAS profile indicator uses the same data, or excuse me, the edge uses the same mechanisms of the indicator that we're attaching here. So again, the indicator is the pure definition of where we find our balanced areas on any instrument that indicator is overlaid on. And that is actually being thrown into this package, thanks Jeanette, for the same price as actually a half price of what we normally even sell the edge for. So, this is, again, these two things go together to some degree. The edge is, again, that aggregate value that we've found is an extremely good way to find which way the tide of the marketplace is shifting or has shifted. using that indicator on all the S&P 500 stocks at the same time. So, we're being pretty upfront about this. This is not, the indicator itself has a tremendous amount of research put into it to be as it is right now. But the edge is something that, we didn't kind of discover plutonium by mistake here. I mean, we did a lot of studies for this, and we've actually found that on this particular time frame, that 5-minute time frame, looking at expansion and contractions in those balanced areas and giving you a very clear, I know that somebody said spaghetti earlier, you can zoom in on, you basically can zoom in on the last, 10 minutes and just focus on when that green line's above that red line in concert with some other things that we go through on the video series. This is a very, and maybe we didn't make this as clear as we probably should have during this presentation, but this is, for the purist, this is literally all you need. I like to look at our long-term inflection points at the same time in landscape view. That's why we put it in there. But I don't look at charts anymore. I don't look at a bar chart. I look specifically at this information because basically I don't want anything else clouding my judgment except for what the internals are telling me what to do.
Thanks for having us, everyone. I think we covered most of the questions that have come in. Really appreciate it, and we look forward to helping you learn the product and make the edge your edge at the end of the day.
Steve, can you show somebody really quick before we get off, like how the task profile indicator will work on a stock chart? Do you have a platform up?
I believe I could. Give me just a second if you want to see it. I do have an e-signal I can fire up here, and it won't take but just a second because that's great.
We went through a short example, and thanks, guys, for staying so long. I know it's a Saturday, and I know you got things to do. I really appreciate everybody staying this long. But we only went through that one example of IBM earlier, and I want everyone to understand that, what's really, really cool about the edge and trading stocks. And you guys that are trading stocks, sometimes you'll probably notice these things. It's kind of a relative versus the index play. Once you get rid of that market map for a second too.
I'm going to clean this up for you guys.
Yeah, if your stock, let's just say the broad market's going down and your stock's kind of going sideways for the day, and then you kind of notice it and go, wow, there's something going on here. Nobody wants to sell my stock. And if the market turns around and goes up, then maybe my stock will go up because it's showing relative strength versus the market. Now, what Steve's going to show you is he's going to show you, there's two things I want to point out here based on what I just said. Here's Apple. All right, and here's some 5-minute profiles or daily, I think, yeah. So here's daily profiles which you will get in this package on Apple, right? And Apple has just been like a horses out of the barn lately as it busted out of that profile about a week and a half ago, right? Now we've got a new profile that's appeared. It's a new balanced area. More than likely it's going to have to explore the whole thing. And if you go back in time, you rarely will see a balanced area that wasn't fully explored. And there's innuendos to use this product. But when you're looking at the edge and you notice that Apple has been a relatively strong stock, guess what? You might, if you're trading Apple intraday and you notice these anomalies going on, when the edge is green line above red line, you're buying Apple if Apple is in a relatively strong state. And when that red line's above green line, you're probably doing nothing because you don't want to short a strong stock in a weak market. So these are some simple concepts that actually increase the odds of using the edge if you're trading stocks and those type of anomalies are identified. So again, when I'm trading stocks, this is how I look at it. I want to buy strong stocks and sell weak stocks. Guess what? That's how portfolio managers ring the register on a day-to-day basis. They know they're going to be in business tomorrow using that same concept, and they're not going to try to, reinvent the wheel that they individually have discovered something on sale or too high. So using the edge to try to gain an edge intraday on some of these stocks that are either relatively strong or relatively weak just, again, increases your odds even further.
I just put some notes on this chart, folks, because this kind of makes this tangible. I think for a lot of people that are still sitting with us here today, again, this is showing a live, well, as live as a Saturday chart is. It's Apple Daily, and remember we talked about that when we're closing above that top red line, above our profiles, you have a long directional bias. And look at this, where prices are. This is down, you know, when the stock was around 110 or 111 a share here in Apple back in December, or actually November. And look, you knew just it was a good value to start getting long, and we teach a technique where essentially you put the stop outside of the opposite side of the profiles, and as new levels form, you just trail the stop behind. That's what I was trying to show you here. And literally, when we said that it gives you not only the entry signal back here to be long, it gives you the mechanism on where to put that initial stop and then when to trail it, a complete mechanism.
Show a weekly on Apple. I want to show this because one of the things that, you know, for long-term guys who are looking to, let's go back in time a little bit. Even though that looks great, you know, these are profiles that, let's see, what is this? Okay, see that break there around 125 in the middle of your screen, Steve?
Yeah. Okay, there we go.
No. In the middle. That's your right middle, right there. Just circle that. Okay.
Middle.
Next, expand that out. I just wanted to see, you know, just kind of stretch the chart out a little bit. Okay, so for you guys who are trading long term, this is a weekly chart of Apple, and how cool would it have been to avoid the move down from 124 to 125, where that thing broke out of its balanced area, put the stakes in the ground, then put a very wide profile in force next, which is telling you that you're going to have to buckle your seatbelt and not have to ride down to 88. How nice would that have been? All right, so, you know, as this profile you have access to in the package will allow you to kind of gauge stocks, gauge indices, look at different time frames. You know, what we look at a lot of times is we'll look at multiple time frames to try to really, you know, drill down even further. But for you long-term investors, I'm a trader, but for you guys who are just using this, getting the package for the indicator alone, you know, it could be looked at as doing yourself a favor. And I want to show, you know, a lot of times we talked about, you know, you use these inflection points, the bottom and the top of these profiles, to pick your battles. Right in the middle of the screen, you've got a bottom out there. You've got to break above profiles for the first time. You had to kind of dig in and buy support area around 104. You know, Steve and I do a lot of videos, and I remember the day where we were saying 104, back the truck up, put the stops in, and at least let it breathe up to 116. That's exactly what happened. Didn't have to happen. But when we break that area and consolidate above, then you've got an even more powerful trade. So if you're looking at situations like this, and then you're using the edge intraday to try to maximize, you know, again, relatively strong stocks or relatively weak stocks, I don't think you can. I don't think you're shooting yourself in the foot by using it. Put it that way.
Other questions? Can you do it on futures? Absolutely. As you can see, I got a whole host of futures here. I'm quite active in that arena. But yeah, you can look at your goal. Like here's crude. I'm just giving you some examples. So when I told you that I thought John was nuts for working out, putting in this profile indicator into.
Go back up to purchase price so they can see how nuts I am. I want to see that again.
Okay.
I'm going to try. And
yeah, you should. The answer is yes. So it works on any market and any time frame right there. And let me give you an example of that. Okay, so here, this is a weekly time frame of crude, and pay attention. I'm just going to give you the broad sweeping strokes here, okay? Because once you become a member, you know, then you get the education you need to know what side. So here's a short side. Now here's a trade I want to show you. In all fairness, there's a trade that it told you to call it quits on that and get back on the short side. You see how this works? So I'm going to show you again very quickly how it doesn't matter the time frame. I'm going to go all the way down to a 60-minute time frame. This is a great time frame for you swing time frame traders. There you go. You saw the break here recently. This is Thursday. No, this is yesterday, 20th. Late morning, this crude market broke below, where's this level here, about 47.15. And look where the market is here. We closed at 45.60, folks. So, again, just to put this in perspective, do the math on that. That's a $1.10 move. I'm sorry, a $1.50 move. That's $1,500. That was one trade. yesterday, and we're talking about giving you access to this tool
for free.
Yes, this one trade, you get to pocket an extra $1,000, and you get to keep using this tool for the next 3 months at that price, that crazy price that Jeanette. I don't know what kind of smooth talker you are, but it's yeah, you got it. You guys are good. And then you can drill down even shorter. You want to do short-term trading, guys? Again, here's your 5-minute. It'll adapt to it. So again, all of the rules of engagement are the same. You don't have to learn different rules.
And look at the entry points and breakouts and breakdowns that happen on this particular type of environment. And again, that's why the edge is as powerful as it is, because it lets you know when the underlying instruments, based on this same logic, are breaking out, consolidating, or breaking down. It's those three simple states that the edge determines, and it determines where the tide of the marketplace is changing based on the aggregation of that. So, Steve, I'd like to, if there's no more questions, I'd like to put the purchase page back up one more time, because we don't even sell it for this. I mean, it's just way off base from what we have traditionally sold.
You can get it by noon tomorrow, because things will be changing there.
Yep. Well, I want to thank everybody for coming. Jeanette, if you want us to stop talking, I totally get that. And I'd like to thank everybody for showing up today.
Thanks, everybody. Enjoy the rest of your weekend.
All right, guys, and we'd like to thank you. I want to go ahead and take the ball back, and I will share my screen over here and give you all of the links from today. Their link is hosted on our site, so it's TradeThirsty.com/edge. And you're getting both their indicators for, as they mentioned a couple of times, cheaper than what they sell on their own site. And I think definitely bringing them back on during a live demo of the live market will be worthy in the future. But this price won't last that long, so it's totally up to the buyers to take advantage today.
No.
All right, everybody, I'm going to go ahead and close it down for the day. Our next Saturday event is in August. Let me look at the calendar. August the 26th. And of course, don't forget that tickets to Chicago go on sale on August 1st. So be ready for that. Be watching for emails to get on the RSVP list for our 2 Comma Trader event, which is, I feel like we started playing it years ago, and here it is, less than 2 months away. Thanks again to John. Thanks again to Steve. Thanks again to the other speakers, Chris and Mark. And thanks, of course, to you for coming and spending the day with us. We hope you have a great weekend, and we'll see you soon.